OpenAI didn't kill Google. Wang says it saved Google by scaring it into using its data, chips, and Android army to become the most dangerous AI platform on Earth. Watch to the end to hear his playbook on small modular reactors like Oklo and why he thinks energy cost, not algorithms, is the real moat in the AI software race.
The market is unclear as to what the impact of AI is and if there's going to be continued spending. There's 650 billion of commitments coming from the hyperscalers, and they're looking at those numbers and saying, is this going to continue and how long will that continue? And then we've got the whole story coming on the software side where you've got companies like Anthropic disrupting folks, creating a SaaS apocalypse in the market. So there's a lot of uncertainty. People are taking some money off the table and they're waiting to see what happens. But I think if NVIDIA comes out strong, what you're going to see is the market is going to recover and say, okay, this isn't as bad as we think it is. We just need to figure out who the winners and losers are now in that next wave of AI in the software layer.
So but it seems to me two things. 2 years ago, when these big hyperscalers are saying, hey, we're going to spend X amount of money, Wall Street says, well, that's a lot of money, but they can't keep it going. They've kept it going and then some, and now Wall Street is saying, well, they're spending too much money. I'm not sure how Wall Street has the ability to assess that. These are the most successful businesses that have ever existed. So my question to you is, at what point does the stock have to go to, like, again, the target today, 250, is there a breakout point where all the anxiety goes from being being out of the stock to being, I got to get in there as soon as possible?
That's going to happen in about 30 days when people realize there's nothing else in the game and we've got winner takes all markets. I mean, what we saw in valuations over the last few weeks is, 25-year-old quant jocks, equity analysts pretty much set the terminal date from 30 years to 15 or 10. And that's why all the valuations kind of crash. But the reality is, there are only going to be a few winners. AI is expensive. AI requires a lot of investment, but those who survive are the ones that are going to win. Kind of like when we were looking at, what's going to happen in the search business, or what was going to happen in terms of, who's going to win in the PC market or in the networking market. We're down to one or two winners, and that's really what's driving this right now.
Speaking of search, at this point last year, everyone said Google's the loser. AI is going to eat their lunch. The stock was in a death spiral. All of a sudden, they've got Gemini. All of a sudden, they've got their own TPUs. All of a sudden, they come into this year, the hottest stock in AI. Then this morning, Wells Fargo says that they're best positioned within the AI sphere with all of these fears. You like Google as well. What sets them apart in your mind from everyone else?
I think the best thing that happened to Google was OpenAI. It got them to get their act together. They have everything from TPUs, which are the chips. They've got the capability to put Gemini in distribution. They've got all their phones and decentralized AI, and Android that gives them ability to distribute Gemini across the board in every area. And more importantly, they've got a cash flow business that pays for everything from cloud to search. And that's really what it is. These digital giants, which we've been talking about, basically have an advantage of not just having the data, but the network and now the compute. The only differentiation in the software market today is your energy costs, your ability to actually get to the data, and more importantly, your ability to build the relationships. There's no other moats at the moment.
Ray, real quick, I know like Oklo, the stock has come down dramatically from where it was not long ago. They missed the street by 63 and 61% in the last 2 quarters. And next year, fiscal earnings looking for a loss of 65 cents. 3 months ago, it was a loss of 59 cents. How long will it take for the company to live up to the initial hype? Because right now, that's not happening.
It's going to take the permitting mess to get around. It's going to be the ability to actually get more of these, these SMRs up online. But the short run is we don't have a lot of options in this space, and they're probably one of the best options in the market at the moment, short of recommissioning decommissioned reactors out there.
Yeah, no, I'm ready. SMR, NNE, Oklo, I'm licking my chops. I just don't know when to jump in. All right, Ray, we'll call you again for that and other things. Appreciate your expertise today, particularly today.